Welcome back, my friends. There are now three major forces at play influencing oil prices: more OPEC cuts, a U.S. production boom, and a market share war. Here's what oil markets are anticipating in 2024. Experts think the U.S. shale drilling boom will continue, boosting the world's supply of oil. The oil market could see big shifts into 2024, analysts have warned. Experts think the U.S. shale drilling boom will continue, boosting the world's supply of oil. But oil prices risk more upside as OPEC looks poised to slash production further. OPEC can't cut oil production enough to push crude prices higher. At least one energy expert says, OPEC can't cut oil output enough to push prices higher than where they're at. According to one expert, that's because the U.S. is producing a record amount of oil. A softening economic outlook will hit oil demand next year. But before we get into all of that, please hit the like button and leave us a comment below. We would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. And before we continue, a word from the sponsor of this video. Today's sponsor is ProWorldNet.com. ProWorldNet.com is a job website specifically dedicated to licensed professions. Doctors, including any type of specialty. Nurses, and that includes all grades of nurses. Lawyers, regardless of area of legal focus. Teachers and professors, from kindergarten through graduate school, as well as any kind of job that requires a government license or certification. And ProWorldNet.com also includes short-term gig-type jobs as well. So be sure to check out ProWorldNet.com if you are looking for a job or an employee. Oil markets could see more big shifts into 2024 as supply concerns run on in the industry, experts have warned. Crude prices have seen a wild year so far, with Brent crude, the international benchmark, having fallen around 35% from its highs last summer. That's largely because U.S. oil production has continued to boom, notching a new record in September. Markets, though, could see some big shifts coming next year, particularly as Middle Eastern producers try to claw back more of their market share. Demand, meanwhile, remains uncertain, particularly as big energy consumers like China deal with slowing economic activity. There are four big things experts are eyeing for oil in 2024. First, the cartel has vowed to slash its crude production 2.2 million barrels a day in the first quarter of next year. And top members have said those cuts could be extended deeper into next year. OPEC has already slashed its production multiple times over the past year in a bid to prop up oil prices. But markets have shrugged off the supply cuts, in a possible sign that OPEC's control over the oil market could be fading. That's as more non-OPEC supplies fill in the gaps. In fact, Goldman Sachs recently lowered its Brent crude price forecast for 2024 to account for booming U.S. production. Second, domestic production will average 13.3 million barrels a day next year, according to Rapidan Energy. That's up from this year's average of around 13 million barrels a day. Major energy giants like ExxonMobil and Chevron have already ramped up their capital expenditure budgets with the intention of stepping up their production next year. Meanwhile, a record $100 billion of mergers have taken place in the Permian Basin this year, according to consulting firm Wood Mackenzie, a sign that firms see oil being a critical source of energy over the long run. Third, Saudi Arabia could end up flushing the oil market with supply in a bid to send oil prices crashing. That swing could force U.S. producers to pull back and surrender some market share. You've got to attack the guy that's making the marginal decision to drill or not, and that guy is Mr. Permian Basin. Energy expert Paul Sankey told the New York Times in a recent interview. As the U.S. ramped up its shale production, OPEC's total share of the crude market fell to 51%, its lowest in nearly a decade, according to International Energy Agency data. But some strategists say that scenario is unlikely. Goldman Sachs said it didn't expect Saudi Arabia to flush the oil market. Fourth, the world's oil demand is bound to grow in 2024, though at a slower pace than it has in previous years. According to the U.S. Energy Information Agency, demand is forecasted to rise by 1.3 million barrels per day next year, slightly lower than the 1.8 million barrels per day oil demand is expected to have grown in 2023. Much of that will be driven by China, where crude demand is expected to improve into next year. Over the longer term, oil demand is likely to improve over the next decade, an analyst told the Wall Street Journal. And JP Morgan's chief energy strategist estimated that the world wouldn't see peak oil demand in this lifetime. Oil prices have been edging higher this week, but there's not much OPEC Plus can do to lift prices beyond this point, one energy expert said. That's because the U.S. has been producing boatloads of oil, notching record levels of production and crude oil exports. OPEC just can't cut enough to sustain a price much above where we are right now. John Kilduff from Again Capital told the Wall Street Journal. West Texas Intermediate crude oil is trading at $75.94 a barrel, up from levels of around $73 last week. Prices have ticked up as tensions in the Red Sea have been rising. Brent crude, the international benchmark, spiked to $81 a barrel on Tuesday, up from $79 the week before. But oil prices are still far below September highs of $94 a barrel for WTI crude. Those sinking prices have come as the U.S. has pumped a record amount of oil, flooding markets with a glut of supply. And it's gone directly against OPEC's attempts to boost prices by slashing production. More broadly for oil markets next year, Kilduff sees crumbling demand in the face of a slowing global economy. For the most part, there's headwinds here in terms of the economic outlook, he said. The reason global central banks are cutting rates is not just because the inflation situation has potentially been tamed, but because the economic outlook is softening. And that's going to speak right into crude oil demand, energy demand for next year. The U.S. Central Bank has also been eyeing rate cuts next year as key economic data like inflation has hinted at signs of a cooling economy. But rate cuts might not be all that positive a sign, and are more like a double-edged sword. According to Kilduff, it could crush demand for oil. Meanwhile, the turmoil in the Middle East seems less threatening to oil, Kilduff added, noting that recent attacks by Houthi rebels on key shipping routes wouldn't be a big deal. And that markets didn't budge much after other political events like missile attacks by Houthis in 2019, or the U.S. drone strike in 2020 that assassinated Iranian Major General Qasem Soleimani. We will have these pinprick events. There may be some boost in oil price like we are seeing today, he said. Plus, it's a thinly traded market, so they're getting that advantage. But in terms of this thing escalating, at some point in time, the Iranians will cross a line that will get them put back in their box or their agents. But what do you think? Please hit the like button and leave us a comment below. We would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. Please share this video on social media. Thank you for watching.